100% of the information. Someone who is having a lot of fun helping a lot of people. Someone who is no stranger to the financial industry, a financial advisor, the creator of the BYOB movement. We call her the trade whisperer. Ladies and gentlemen, I introduce to you Miss Tasha M Dyer. Miss Dyer, are you on the call?
Yes, I am, Mr. Phillips, and I am so excited for what is actually about to transpire. Ladies and gentlemen, if you have not had the opportunity to hear or see Mr. Phillips, you definitely want to make sure that you do so. So I'm excited. Keep dropping it in the chat. Let's keep dropping it in the chat. Where are you calling in from? This is BYOB. Be your own bank. Think like a bank, act like a bank, become your own bank. BYOB worldwide. BYOB worldwide. So please drop it in the chat. Let me know where you're calling in from. This is a training call tonight. This is a training call. And so tonight you ask your questions. We're here to perfect your skill set, to sharpen your tools. So drop it in the chat and let me know where you're calling in from. Let's see, where do we have here? Orlando. We got Orlando. Trinidad. Canada, Raleigh, Baton Rouge. Yes. You know, I want to be home soon. Philly. So look at it. Augusta, Georgia. Wilmington, North Carolina. So just keep dropping it in the chat. And also we want to make sure, hey, Atlanta, I see you already doing your affirmation. So we want to make sure that we are definitely in alignment with that. So let's get those affirmations coming. I am a master trader. All my trades end in profit. I am a master trader. All my trades end in profit. Thailand. Let me see. We got Thailand, Columbus. I am a master trader. All my trades end in profit. I am a master trader. All my trades end in profit. So here we go. There we go. In Jesus' name, in Jesus' name, in Jesus' name. In the mighty name of Jesus. So let me share my screen with you. So what I want to do tonight, hold on, it's sharing. What I want to do tonight is, let's see, make sure I can see you guys. Answer your questions. I have to make sure that's up. Hello. So, okay, here we go. Got my comments back. I got my comments back. So what I want to do and where I want to begin today is I definitely want to first and foremost, if this is your first time on the call, let me get a 111 in the chat. Let me get that 111. If you have been on the calls, but you're still learning how to cash out, let me get a 222. Hi, I know you're not a 111. I know you're not. All right. Got quite a few people that's learning. So buckle up, enjoy the ride. But what I want to do is for you all is I want to start, I'm going to drop down to the 15-minute chart. And we're going to discuss the BYOB cash out, right? We're going to discuss that. And so in discussing the BYOB cash out, what I definitely want to do is make sure that you all understand, that you all know how to cash out. Because what we're doing today is going to take you a little advanced, but I want to be able to help you understand how to hone in your eyesight, right? I want you to be able to understand how to take your eyesight and actually to see something more, to be able to see something, you know, as far as what people are seeing when we're on those morning calls or what I'm seeing. And because we all see differently. But the BYOB cash out is 3 simple confirmations. Then, of course, we add time frame confluence. But I want to be able to highlight for you this evening. So let's enjoy this ride. So first thing first, the 3 confirmations are always I'm looking at my stochastic, which now the stochastic, it measures momentum. It is comprised of moving averages. That's what the stochastic is all about, okay? That's what that stochastic is all about. So it's a momentum indicator. And what that momentum indicator, so it has closing price and moving average. So we don't have to go back to math. We don't have to go back and try to figure out how it's calculated or any of that. You understand that's why that's so accurate. We measure that momentum in the market. I get that blue line that crossed over the red. Blue line cross over the red and the upward momentum. Blue line cross over the red and the downward momentum. That determines my buy or sell. I get the question a lot about what the vibrato calls or what, now understand the strategy is housed in the vibrato. Key strategies housed in the vibrato. But understand that what it does is it scans the market for those entry triggers. It scans the markets for high probability trades. That's what it's looking for. And when it scans the market, you then see it gives you a call price. So basically, when it scans the market, we're never really focused on that actual call price. But what happens is when it scans the market, it scans the market around this time, right? So if I was to click on that and it scans the market around that time, matter of fact, I'm gonna do that. I just want you guys to see. So it scans the market around this price. Let's see here, 87291. Watch this, I'm gonna beat it at its own game. 87291. So this is pretty much where it identified something that's happening on the 15-minute chart. That's what I identified. And if you notice, okay, it says it's a potential buy, but I just want to show you that you sitting on a support line. This is a line. So I just want to point that out. It's actually, and that's what we're going to kind of talk about tonight once I explain the strategy. So, but I just want you to see that, so it identified, so this says potential buy. It says potential buy. But, however, when it scanned the market, it's a possibility that it'll bounce off of this support line. It's a possibility. That's why it's saying potential buy. Now, you determine, now, you have to make the decision and the determination based on the strategy that you're using. Do I take the trade? Do I take the buy? Do I take a sell? What do I do with the information that I've been given? So this is a trigger. And entry triggers happen around, if you're trading price action, entry triggers happen around different areas when the market identified, but you have to look at 3 areas of value to determine if you take that trade. So I'm not looking for this to tell me, oh, let me just jump in for a buy. I have to then, so I know that there's an entry trigger that actually happened around UTC time 102. So UTC time. So during this candle, during this time frame right here is my entry trigger. This is my entry trigger right here. So I understand that, but that doesn't mean I take a buy. That means that we have to determine if it's going to bounce off. What is this going to do? What's going to happen? So BYOB Cashout, what am I looking for? I'm looking for my stochastic, blue line cross over the red. You notice they have these numbers that run along the side. So these numbers run along from 0 to 100. So my stochastic around the 80 curving downward or around that 20 curving upward. That determines my buy or sell. That determines my buy or sell. So once you make that decision, then you turn around and look at my other 2 indicators. I have my trend candles. My trend candles which are my trend candles. These green means buy, red means sell. That's what that means. So I'm looking for a red candle with a flat top, a green candle with a flat bottom. And then I'm looking for my PSAR. I'm looking for that parabolic stop and reverse, which shows reversal in the market. Okay, you notice, where did my PSAR flip once again? That PSAR flipped around that support line. So why is it so accurate? Because you have 3 areas of value that you utilize when you're talking about entry, a potential entry trigger, and do I take it or not? So what my entry trigger tells me is that it indicated that it's possibly going for a buy. But what this tells me is that what I should be looking for is for my strategy, BYOB Cashout, to tell me what I trade and how I trade. That's what I need to be looking for. So my blue line crossed over the red in a downward momentum. I have a red candle with a flat top and my PSAR flip. That is the BYOB Cashout. So same thing from a different direction. I have my blue line cross over the red. I have a green candle with a flat bottom and my PSAR flip to the bottom. So we're going to look at both of these, and then we're going to look at how we're going to definitely talk about some support and resistance lines. But I want to put this around where this was ready. So far, let me get in the chat. Let me get that 555 in the chat if you're with me. If you're with me and you understand what I'm saying. Are you with me so far? Okay, great. Because that should eliminate some of the questions that I have. That should definitely eliminate some of the questions that I get. So here we are. Now, what is time frame confluence? What is time frame confluence? Time frame confluence is simply using a lower time frame and a higher time frame to validate my trade to make sure of what I'm doing and where I'm going. So as you can see, I have this lined up for a buy. I have this one lined up for a sell. So when you notice also, I just kind of want to point this out because this is a training night. You notice also that my candle is also when my confluence hit. This is why I said, if any of you ever have traded price action, you're trading price action, put the cash out on top of that and watch how much more accurate your trades get. Look at this, okay? Look at where this candle gets a flat bottom. It gets a flat bottom at that support line. That's where it gets a flat bottom. My PSAR flips around a resistance point. So keep that in mind. Then also what you want to do is, so let's drop down to the 5-minute chart. Let's validate these. So here, what I'm looking for is I need to be still selling. So if I drop my horizontal, now these are just for visuals so you guys can see what it is and how it lines up. So don't mark your chart up like this, because I don't want you to waste time and miss pips in your trade. So you notice that when it dropped, I was still in that sell on a 5-minute. My stochastic is still in the sell. Remember, I don't see any of this. I don't see any of this to the right as of yet. And when I come over here, I want to see the same thing. I want to see this still in a buy. I need this to still be in a buy. So with that still being in a buy, you know, you look at the fact that this is still going up and this is still going to, remember, I don't see any of this to the, I don't see any of this to the right, because when you look at this, what you're actually looking at is this blank canvas. So you have to make that decision. Now we're going to go to the 1-hour chart. Now, this should look like it's headed into a wait list, right? A wait list. So if I would put it on my wait list, I would definitely take the trade. What happened right here, I am actually in a valid trade. I'm going to move this to the side so you can see. Look at this. Now, it has a wick on it, right? Of course, we saw that when I moved the line, but it has a wick on it, but that's okay, because this needs to look like it's about to buy, not already in a full blown out buy that we're looking for. But I have a green candle. I got a PSAR at the bottom and my stochastic is going up. Definitely something I put on my wait list. So I definitely would take that trade. Over here, it wasn't a buy, flipped to a sell. My stochastic is even beginning to do my curve. So this swing of the market, is actually going into a sell. So both of these are valid trades that I would have taken. Do I have any questions before we go any further? Any questions? No questions? Okay. So now, what I want to do from here, which part, the 1 hour? Okay, you got it? So I'll just show you the 1 hour. I'm gonna erase the line so you can see it clear. I erase the line so you can see it clear. Because I want to make sure you got it. I want you to see it clear. Now focus on the arrows. Where are the arrows? So when I go to the hour chart, if you've ever said, you know what, I'll put something on my wait list, then meaning that I see the trade moving in the direction I want it to move in. For example, this one is moving into a buy. It's definitely moving into a buy. So this was in a sell. So my swing of the market, I'm not looking at the stochastic on this one. I'm not looking at the stochastic. I'm looking at it to begin to line up. So remember, I analyzed on the 15. I already have my confirmations on my 15, or I wouldn't even be here. I wouldn't even be on this chart if I did not have my 15-minute in alignment. So, but the swing of the market, it goes up, it's going up into a buy. My stochastic is moving up. My PSR is at the bottom. They all will not be the same. Now, also on this one, you see how the candle started turning red and it's going downward. I actually got a PSR at the top, and my stochastic, it was going down. It looked like we had some pullback here, but look what it's doing. It looked like it's going in that sell. So that in itself would tell me I will put this on a wait list. It looked like it's moving into a buy. It looked like it's moving into a sell. So based on that, I would take that trade. When I take that trade, you look at how many pips. Now this is GBP, so it's going to be quite a few. So it's 72 right there. And then this is actually 32. So that's how GBP moves. So the 5 is in a sell, but my 15 an hour in a buy. No. If you're you should be, we based everything starting at the 15-minute. We based it starting at the 15-minute time frame. We started at the 15-minute. So you definitely want to make sure we started at the 15 minutes. So you base everything starting at the time frame that you're trading on. So we just did this off the 15-minute. No, I did not say I would put it on my watch list. What I said was when I do my time frame confluence, listen carefully. When I do my time frame confluence, I drop down to the 5-minute. The 5-minute needs to be in a sell or a buy, the direction I'm trying to take my trade. My hour needs to look like it's going into what I'm trying to trade, meaning that my hour needs to look like it's going into a sell. This one needs to look like it's going into a buy. That's what I said. Not that I'm putting it on a watch list. When we're trading and we're on here live, we'll look at some trades and we'll say, okay, it looks like it's getting ready. It looks like it's getting ready. When you see that, that means that's a watch list. We'll say, add this to your watch list because it's about to be a sale. Add this to your watch list. It's about to be a buy. That's what that means. So I'm not calling extra trades. What I said is that hour needs to look like it's going into. It has to look like something that I would put on a watch list. So we haven't got to the 5-minute chart yet. We have not gotten there. So that's what that needs to look like. So that's very, very important. Now, if I want more than 10, now GBP, you need to practice it. And I'm going to give you a little cough, cough, hint, hint. Just with that right there, you can get more than 10 pips with GBP. However, you need to practice it in your demo. The strategy is 10 pips and cash out. That's where you need to begin. You need to get comfortable in that. You need to own that. You need to practice that. You need to be selling profitably or buying profitably in your demo account. You have to be doing that before you go to the next level. But as you are building, as you are building your confidence, building your trade account, building and understanding the movement in the market, as you are understanding that, then what you want to do is at that point, you will start, as you building your relationship with the market, should I say, you'll see that GBP pairs will give you more than 10 pips. That's why their stop loss is so great. So risk to reward, right? Risk to reward. So look at that. That was 59. So when I see I got a stop loss like that, I'm doing more than 10. But just if you do time frame confluence, you will also, it'll help. Well, actually, I'm on the hour chart, so I wouldn't do my stop loss off the hour if I'm trading at 15. My stop loss will be over here too. So my stop loss is above the PSAR for a sell. It is below the PSAR for a buy. Now, if you are attempting to trade from support and resistance to support and resistance, you also want to understand the trend of the market. What is the market doing? So we already checked the hour, and I will actually check the 4 hour. So in this case, the trend of the market is not in a buy. It's not in a buy. So I would not go for more than my 10 pips. In this case, the trend of the market, I got a sell on the hour, I got a sell on the 4 hour. So the trend of the market is in a sell. That's what that is. The trend of the market over here is definitely not in a buy. So when you're looking at those other currency pairs, right? When you're looking at currency pairs, you want to understand, like, let's say, for example, let's use this one over here. Maybe this would have been in a buy. Let's just check it. That one might still be selling right there. Okay, this one's in a buy. Wait, wrong one. I'm looking at the wrong arrow. So that's in a buy. This is in a buy on the hour and the 4 hour. So my market is trending up at that point. 15-minute is also in a buy. So at that point, I know I could have went for it to take profit 2, maybe to take profit 3. And that's another part of the importance of your support and resistance lines. So let's jump back up here and let's mark it up. How do I mark up support and resistance to help you see that? So this is going to help you in identifying that. So swing in the market, 10 pips and cash out. You drop the 111 or 222 in the chat, you're 10 pips and cash out, period. Like, it does not matter. I want to be clear. Do not attempt to do more than 10 pips if you are not trading the cash out successfully. I do not. But I mean, you can do what you want to do, but my recommendation, my advice, my suggestion is do not. Do not, do not, do not. If you are trading and you've been successful, then, and you can cash out on your own, not just when I'm on here, then now you can actually look at these support and resistance lines and understand what else you can do. So on the hour chart, I start my support and resistance on the higher time frames. Okay, I start them on the higher time frames. Now, first thing I want to do is I'm going to change it to a line. So that helps you see this is just the close of the market. So I'm going to change it to that line. Now, when I change it to that line, what you're seeing is you're actually able to see, you're looking for those you're looking for 2 or more touches. So now me as a logistician, right, this is something that I did successfully for quite a while. I look at it, and to me, it looks like checkpoints, somewhere the market is required to stop. So and it always happens around the same place. So it's just somewhere that the market is required to stop. Now, you don't have to have a lot of them on your chart, but I just kind of want to put a few on here to kind of give you an idea of what they're going to look like. So I'm just gonna drop a couple on here. And remember, this is an art, not a science. So don't say, oh my goodness, it's not at the peak, it's not at that point, right? I don't want you to get caught up on those things, because honestly, let me show you. If I put this right here, I'm gonna have to, honestly, just so you know, you probably seen some people mark some charts up like that. What you're looking at is like a little zone. So it's not a straight line. It's like a little zone. And so then when I switch back to my candles, you can actually see where it's at. And so I can make my necessary and required adjustments. And you can see the little zone where it's bouncing off of consistently. Up, and I grabbed the wrong one. But you can kind of see that where it's bouncing consistently. Okay, this is not working with me. Keep grabbing the wrong thing, but you see, you get the picture. So make this a little thicker for you. So, and then of course you can adjust these, right? I drew them with the line, but you can definitely adjust these. So, I mean, you see one that's right here. Okay, you see one, and look at how it's hitting on those points. You see how it's hitting on all those points. And you see one down here. You see, look at it carefully. I mean, where it has a hard time pushing through the market, where it has a hard time. Now, sometimes it'll break it, and I would actually bring this one down a little bit, but sometimes it'll break it. And when it breaks it, you want to understand, you see how it's just sitting on there like this one, it tried to push through, but it didn't make it. So these are support and resistance lines. Now, if I go back, I'm going to show you how significant they are. I'm going to just go back. So now I'm on a daily chart, and I'm going to just go back. And when I go back, I probably should have drew something down a little bit further. The market is peaking at a high point right now. I'll draw some down here. So I put one right here across, and you see I'm all the way in 2017 right now. I'm all the way in 2017. So when you say look to the left, the market's gonna tell you gonna do. Oh, 17 coming forward to 18, what's the market doing? The market is stopping right here. Move forward, what's the market doing? The market is pausing at those same points. Look at how it peaked through this one, tapped on this one before it broke through. The market is consistent in being consistent. I mean, look at how it's bouncing back and forth around this one. Now remember, you see I'm on a daily time frame. But I'm gonna break it down even further for you. We're gonna break this down even further. So this is the daily time frame. And if you notice that understand the support and resistance, okay, what do I have? I have a trend. So, and also it's really not, we could draw this on any time frame, but I'm just drawing this here to kind of give you a visual. So you notice I have a trend right there. So I have my impulse, correction, continuation, correction, continue. You know, see, it didn't even come all the way up, but that's still what it is. And so you actually start, when you're looking at that, you actually start being able to see where it's going to shift and change, because it loses those higher highs and lower lows, and those lower highs and those lower highs and lower lows. It loses all of that. But you notice that when it's breaking its trend, look at where my pullbacks actually happen. I want you to see where your pullbacks actually happen. They happen on support and resistance lines. They happen at support and resistance lines. That's where they happen. So you notice that what I have, and this probably should not be green. You notice what I have is when it bounces, I got impulse, hit the support and resistance. Correction, stops at the support and resistance. Continuation, it stops around that support and resistance. And then you see it kind of got stagnant on there, and then it turned, and now what do I have? I have a change of trend. My direction changed altogether. It actually changed directions. So going down to the lower time frame, now I want to go to the hour just to kind of give you, now I did that on the daily just to kind of show you how it rolls over and how it happens, because you never really see me on the daily chart. But I mean, I use it to get big picture. But now look at what's happening in between these movements. Look what's happening in between these movements. I have my, you look at all the movement. So it's going down, it's going back up, it's coming down. But where does it always, even if it's pushing up, where does it get stagnant? Where does that happen? So it happens around those support and resistance lines. So, and it's just more defined on the hour. So imagine what's going to happen when I drop down to the 15, because I got more candles, right? So now look what's happening on that 15-minute chart. Look what's happening on the 15-minute chart. So when I tell you the accuracy of the BYOB cash out, because what am I using? I'm using the PSAR, which turns at support and resistance lines. So if you're trading price action, or if you're trading anything else, you notice, like, you see it turned, but it's actually around that support and resistance line. Look where this happened. This one flipped. It's not on it because the candles are where it's at, but it's rolling with it, and it's like a moving support and resistance. And where does it get stagnant and attempt to flip? It does that at the support and resistance line. So do I have any questions? Guys are kind of quiet tonight. Do I have any questions? Any questions? Drop it in the chat. Now's the time to ask before I keep going. Every pair. I'm about to show you something. That's a good question. It works best on every pair. This is the market movement period. I'll draw some more I'll draw some more in just a minute. So I'll definitely draw some more. You're going to see it because I'm about to switch over to cryptocurrency. But I wanted you to understand what the support and resistance lines are. But I'm sure you can see how significantly important they are and how they help you read the market. And so when I say the PSAR is a parabolic stop and reverse, it's like a support and resistance line that moves with you. So your 5-minute chart has to look like a buy or sell. The 5-minute chart needs to look like whatever it is that you're trading into. So if I'm buying, it needs to be a buy. If I'm selling, it needs to be a sell. If it started shifting or it started moving, then I don't want to trade that. So if I'm looking at this trade right here, okay, if I'm saying, hey, is this still a good trade to get into? I go down to the 5-minute chart and voila, its 5-minute chart is in a buy. So I'm definitely not taking that trade. But what you'll start being able to visualize, is how this hits on the support and resistance. Just like if you were on this morning's call at 5, gold ended up spiking for a sell. And I said I wouldn't take that buy. I definitely wouldn't take that buy because it's knocking on the door of a support and resistance lines. It definitely needs to be pushed through. It definitely needs to be through there. So yes, this is being recorded. So yeah, it'll be posted. It's going to be posted on the YouTube channel. So you'll see it on the YouTube channel. BYOB Challenge is the channel. So that's what you're looking for. And so you notice like this hit, but when I said GBP was stopping this morning, matter of fact, I don't even know. We'll have to, this has to be it because it was in that nice sell and then it spiked back up. So that's got to be it. And so when GBP came down and it did the same thing, gold spiked down, GBP spiked up. But you notice it spiked up, and where did it stop? It stopped at a resistance line. That's where it stopped. So if I'm with the trend of the market, this is how you do a take profit 1, 2, and 3. Because you can use a take profit 1, take profit 2, take profit 3, because you might not want to just take 10 pips. So you might not want to just take 10 pips. So in this situation, I mean, just looking at this will be a take profit 1. Here will be a take profit 1. So when you see people showing, oh, I got to take profit 1. Here's a take profit 1 on this support line because we started selling here. So this is a take profit 1. And then my next support line is my take profit 2. So you'll be able to do your own take profits. You'll be able to make that determination and that decision. That's your own take profits. So that would have been a take profit 1. That would have been a take profit 2. So when you hear me say, you know, we took the trade, we're in profit, and you hit take profit 1, move your stop loss up. If you're not being able to do a trailing stop loss on your computer, move your stop loss up. You want to come move it up somewhere around, let me change the color of this one. Actually, I'm going to delete it. And I'm going to use this. So my stop loss would be somewhere up here because I've already passed that line. I've already passed through there. So my stop loss, if I push past this, now my stop loss is here. Now I'm in a risk-free trade. I'm in a completely risk-free trade. But I want to keep it outside of the PSAR. That same thing I always say, outside of the PSAR. But it would be, if I push through there, then I would already be on this level. So you see where my stop loss will be. I would have moved my stop loss up above that PSAR. Because what I do know, once again, what I do know is that if the market pulls back, if the market gets a correction and it pulls back, then it's not going to go outside of this PSAR. It's not going outside the PSAR unless it actually changes. So you know you would have been in a good trade. You would have been in a good situation. So is there a difference between a pullback and market correction? No, they are the same thing. So, and how do you avoid getting caught up in a correction? Using your time frame confluence. Use your time frame confluence. So everything, my stop loss and everything, my stop loss, everything is still, my stop loss is, if I'm analyzing on a 15-minute chart, I do my stop loss on a 15-minute chart. You always want to make sure that's the time frame you're on. It wouldn't change. Once you hit it, you hit take profit. If I put a take profit 1, when I hit it, I done took profit 1. It does not change because you executed that trade. You executed that trade. So let's switch over to BTC. Talk about, you know, that nice spike over the weekend, right? And we missed it. Well, I missed it. I know some of you guys cashed out. But let's talk about BTC. Same thing. Might actually come over here a little bit. But it's the same thing. So I'm trying to trade. Ha, you missed it too. No, you trying to console me? I got you. So this is BTC. Let's mark this up. Well, it's really, see, this is how cryptocurrency works. It kind of shows some consolidation and then it moves. So remember when I told you that I would not, if I'm not doing the swing in the market on cryptocurrency. When I trade cryptocurrency, I want to know, I need it all lined up. Me personally, I want it lined up because it moves. It moves a lot faster. So I'm going to get my line so you guys can see it. Because when you're cashing out, I need everybody cashing out. Draw my line, I need 2 or more touches. So I need y'all cashing out. Right? I need those 2 or more touches. I'm going to change this back. Now, what do you see? What do you see? Can you see it now? If you can actually see that now, let me get a 555 in the chat. No, consolidation is not the same thing. To understand the trend, go to im.center and go through the academy because that's going to help you understand what uptrend, downtrend, range, and consolidation is. All of those. So it's going to help you understand all of those. So now you guys can see it and you're with me. So now you guys are with me, and what you're looking at is the support and resistance. That's what you're looking at. So what I see is, so we saw the line. So I'm gonna drop down to the 15-minute chart. I'm gonna drop down even lower. Now you see more here, right? But it still falls within there. And so what I'm gonna do is I'm gonna, okay, you wanna see let me go back up. I sure can. So when I drew this line, and you're talking about 2 or more touches, see right here is a touch. So I'm gonna go back to let me start from the beginning so you can say, can I put an arrow? So here's a touch, here's a touch, here's a touch. So 2 or more touches, and 4, here's a touch, here's a touch. So you see them now? You should see them now. So and now when I put the candles back, you can actually see them. So when I drop down to the 15-minute chart, what you see, look at this. When you see how crypto, it does this with Forex, it does it with everything as well. But you see how it's pushing on the support line. It's pushing, 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 pushing. It's pushing, pushing, pushing. It's pushing, pushing, pushing. But it doesn't break through. So that's that stagnant point that it always gets at. And then you have these little dynamic, excuse me, you have these little dynamic support and resistance lines that fall within there as well. So the major ones I pulled on the hour chart, but then you actually get these dynamic ones. So I can actually drop another support and resistance line through here because, and of course you see it look kind of thick, right? It look kind of thick, but so you can kind of see where it's trying to push through it. It gets through that a little bit. It comes back down. It's tapping on there. It's pushing up. It's pushing up. It's tapping, tapping. It's bouncing back between it. So this one I'm gonna just leave thinner because I want you to. This is not the one that we did on the higher time frame, but I want you to see that you have these dynamic ones inside of here as well. So you definitely always have these as well. So these support and resistance lines, and see, look how important it is. It might not be a good color. So, and you can see where it still does the same thing as the ones I marked up on a higher time frame. You just it pauses the market, it holds it, and so it's doing the same thing. So I always start on the higher time frame, then I break it and I bring it back down. That's what I do. And so, and then of course, I told you I like the 5-minute chart of trading cryptocurrency, and look, it's even more dramatic. You know, we put the one here, that still might not have been a good color. Let's see here. Maybe I do need to leave it kind of thick. So, but you notice, so when I drop down even more, I see more. See? You see some more. So that is that, and look at it. So it actually is staying. So on a higher time frame, so if you're doing long-term trading, right, you wouldn't have seen all those other ones on there because you notice that it pushes right through. If you're doing long-term trading on higher time frames, you notice where the white ones are. It doesn't hold the market on the higher time frames. It doesn't hold it at all. But when I go to the lower time frames, it holds the market. So it just depends on what style trader you are. So if you're a long-term trader, a swing trader, intraday trader, you're looking at the markups from the higher time frame. And they do not, as you can see, it does not hold it. It doesn't hold the market around those white ones. It just doesn't. I mean, you see it reversed a little bit, but it kept going in the same momentum. So you can see it didn't really affect the overall structure of what the market was trying to do. But when I come down here, it does, because you have so many more candles and so much more movement because it's lower time frames. So look at what you see. You actually see opportunities for you to trade from zone to zone, zone to zone. So when you get your markup, zone to zone. You get your mark, stochastic, PSAR, green candle to that line. Okay, this one didn't line up because that one was actually a correction, and then you see it continue down. But I wouldn't have been trading this with that going up. So that's where that 50-50 come in. So when I trade crypto, I trade anything else, I want to make sure that I'm more cautious because it moves. And remember, the market is not a charitable organization. We're not looking at giving our money. I told you guys, if you want to donate some money, I will drop my Cash App. I will give you my Cash App, and you can donate to the Tasha Fund, the Trade Whisperer Fund. But so just pay close attention. Don't trade with anxiety. Don't trade desperate. Don't trade frustrated. Don't trade with any of those things. This is a non-emotional state that you should be in, and when you're trading. So you just want to make sure everything aligns up. So if you miss a trade, so what? Guess how many more trades it is? I'd rather miss a trade than take a trade that I shouldn't have took, because it's going to be so many more trades and so many more opportunities to take. So that's definitely the perspective I'm coming from. And gold has just been riding it all day, so I want to show you. Let's look at, work with me, computer. Any questions, drop it in the chat. Same thing. Now, this has much more. This is US 30. It has so much more fundamental. You know, because why? This is the top 30 US companies. German 30, top, keyword, top 30 companies. Top 30 companies. I'm going to say it one more time. Top 30 companies. And because it's the top 30 companies, we're not trading right now, we're just training. Because it's the top 30 companies, what that means is it is going to be affected and impacted by anything that happens. Somebody win and is going to be affected by that. So you just have to understand what it is that you're looking for, and that's why I can mark this up on the hour time frame, and I can look at it and do all my fun technical analysis, but then there's a fundamental that might happen that might shift it. So you already know, change it to the lines, but what I'm gonna do is I'm gonna just drop some. So I'm gonna just drop these lines just to kind of give you an idea. So you see those touches, we're just gonna drop some. Same thing. Just want to show you how everything, somebody asked a question. So I just want to drop some. So I just want to, so you can kind of see it. And of course they got some stagnant movement on the inside, and I got the wrong candles. So when you get home from work at 9:30, I don't see any trade setups. Is it better to check them in the morning time? You look for the volatility. 9:30 your time, I think it's 10:30 my time. Understand around 11:30 Eastern, the market starts slowing down. There's a volatility window, especially if you're scalping, that the market moves more. So that's why you have so many people that trade in the morning. A lot of people trade in the morning and kind of trade until that New York session in. If scalpers typically will not, anybody trading scalping or stocks or anything, they're not typically trading in, they're not trading in the afternoon because that market slows down. What you want is movement, though. You want the volatility. So you can actually look to see when is high volatility in the market. That's really what you're looking for. So And somebody mute your phone. Everybody check your phones. I'm trying to mute and it's still, you keep unmuting. So keep your lines muted, please. Keep the integrity of the call. Thank you so much. So now let's go down to the 15-minute time frame. Now look at how many more dramatic. See, these are the ones where we kind of saw some of that movement that happened in there. But I just wanted to kind of show you how big of a difference it is, but it's the same thing. It's different, but it's the same. So I can draw some more support and resistance lines. I can draw some more support and resistance lines. And so what am I looking at? I'm actually looking at the US 30, right? This is the US 30. And so, but where do I trade it from? Y'all hear me all the time. I mean, look at the movement in between here. From here to here, that's literally 77, 73, basically wherever I stopped this at. It's over 70. It's over 70. And then if I move from here to here, that's 90. So that's 100 points right there. Let's go to the 5-minute chart. Let's go to the 5-minute chart. So on the 5-minute chart, look at how many more I actually have within here. So you can actually see it. So you can, don't overmark your chart. Don't overdo it. You know, my GBP USD, my GBP JPY chart actually was looking like a coloring book. But I did take some of them off because I kept adding them because I've been tracking that pair for so long that I kept adding them. And I'm like, okay, now it's looking like a coloring book. You don't want to overdo it. And so I deleted quite a few of them. But you want, because you want to be able to see what's happening. Like I can see that. So now what you're able to see is when that PSAR flips, I got the stochastic, blue line cross over the red and the downward momentum. Guess what? I got a red candle flat top and a PSAR flip. But what is that at? What is that by? Voila. Support and resistance lines. Look at here, look at here. So it's the same thing. And I know you're going to be able to grab on a 5-minute chart because it's points, because it moves so much faster. You can grab 10 to 20 points. Start with 10 and test it out. And then you can see 20 and on and on and on. But you notice that it has a lot of movement. So then when you get somebody like Mr. Rogers who will do the US 30 trades from the higher time frames and that higher perspective, because he understands the reason why I don't, and the reason why I want you guys to pay attention is, and the reason why we say cut Bloomberg off, cut Bloomberg off, cut Bloomberg on, cut the news off, cut the news off, cut the news off, cut Bloomberg on, is because you'll begin to understand how the projections, how the market movement, how those things actually impact and affect the market. So, and as you can see, because of that, you're actually able to get a trade. I mean, that's 239 points just right there. So you're actually, that's how you actually capture all that movement. And notice I did say points and not pips, because you guys, the ruler measures both sides. It's absolutely no way. That is not 2,500 pips. That's 252 points. So when looking at US on the 4 hour to determine direction of the market, are you doing 10 pips and cashing out? Because if you're doing 10 pips and cashing out, then you should not be looking at the 4 hour. You shouldn't be looking at the 4 hour. Right, but that is why it'll confuse you. That's exactly why it'll confuse you. Because if I'm looking at this, because it's about to, you see how that's moving into a sell? Let's look at this buy. If I'm looking at this, I need to know the swing of the market. So that was a buy. Drop down to the 5. Drop down to the 5. The 5 is still buying. It confirms that it's a buy. My hour, go to my hour. My hour, the swing of the market is in a buy. Okay, swing of the market is in a buy. So that tells me I'm going up, because that's what that tells me. So and when I say it should look like it's going into it, remember each one will be different. Look at this trend up, impulse, correction, continuation, correction, continuation, correction, continuation, right? So correction, and it looked like it's going back and still doing that push up. But in this case, you notice that it's look like it's gearing up for a sale right now, but my 5-minute is gearing up for a sale right now. But what's my hour doing? My hour is in a buy. So it's absolutely no way I would sell. It's no way I would sell right now. So I would be looking for this to finish, to turn around, and then to take that back up for a buy. That's what I would actually be looking for right now. I'd be looking to take that up for a buy. So, and how far back to the left do I draw my support and resistance lines? When you drop it, you go back to 2004 when most of the currencies hit the market, because that's where it's going to go back to. I mean, some stuff I've seen go back as far as the 60s, but I don't think we want to go back that far for a trade. But I mean, I'm looking at the hour time frame. That's where I start, and I'm drawing my lines. And when I look back, right, I can see my lines. And when I look back, get where they got a lot of, because remember, I'm trading forward. I'm trading forward. I'm not trading back. But back tells me what forward is going to do, if that makes sense. You're in your demo account and you're 50-50. How am I learning every time? I'm so glad to hear that. If you 50-50, go live. I mean, but you got to be comfortable too. You have to be comfortable. If you're comfortable and you're consistent and comfortable, I mean, you 50-50, that's phenomenal. But I want to make sure that you are trading. I want to make sure you're trading on a demo account with the broker you're going to use. That's my only question to you, because you hear people say, when I switched over, when you switched over to a live account, it was different. It was only different if you're using that MetaTrader 4 or that demo broker. I mean, just like it's football season. Y'all know I love football. So if I play football, I know football. I'm gonna play football. I'm a great football player. But then I switch over to another team. That's just a different broker. It's a completely different broker. It's not that my skill set is any different. It's gonna be different because I got different members on my team. So you got a different broker and how they operate. Their spreads are different. There are different factors in there, but everything's the same. So just make sure that you're demoing, with the broker that you're gonna use. Okay, good. And see, then you'll know, you'll know which one to go to. You'll actually know which one you like if I'm trading indices, if I'm trading Forex, you'll actually know what broker you like and why you like it. So that's phenomenal. I don't know when I said it. I don't know. Need a little more. So I would definitely need. Are you talking about points on the indices? Because that's where I use points. That's the only time I think I said points, is when I was referring to indices. So, y'all are so sweet. Y'all are so sweet. So if you were referring to points on the indices, then this ruler that's on this chart is used for everything that you trade on here. It's used for everything. So you have to know what side to look at. So when I'm measuring indices, the left side is the points, the right side is pips. Indices are not measured in pips. If I'm telling you to go watch Bloomberg, I need you to understand what they're saying. So I'm not going to refer to it in pips, because they're not referring to it in pips. The market, the actual market that this trades on, does not move in pips. So points is on the left side of the chart. So if I say if I see a movement, okay, this is 95 points, not 951 pips. It's 95 points. So when you go look at Bloomberg and you go actually hear and have conversations about the market, or you hear them talking about the market, because that's a financial channel. So anytime you do any financial news, financial research, financial anything, is going to be in points and not pips. So hopefully that answered your question, because that's the only time I think I mentioned points. Oh, you're so welcome. You're so welcome. No. This time for me to transition this call, and it's time to. Oh, gold as well. So gold is points as well, and not pips. So just so everybody understands how the market moves. You guys are so welcome. Now, and the answer to your question is no. It is not about breaking the support and resistance line. This is going to be uploaded and recorded. So